Good day, ladies and gentlemen. I hope you're well. So in today's stream, we're here with the incredible Bill Noble. How are you, Bill?
Hi, I'm good. Thanks for having me.
And today's topic is quite critical. It's about shaping, it's going to shape not just the traditional markets, but also the entire crypto landscape. Now, not many people know this, but in 2026, we will see the US refinancing the largest amount of debt in its history. And that's going to have a major ripple effect across all the markets. And we'll be discussing how this massive refinancing could impact everything from interest rates to household budgets and, of course, crypto. So we'll be talking about what this means for us in the crypto space. Are we in for another big bull run, or is there a storm brewing underneath the surface? And with all the liquidity flowing in, will it find its way into the crypto markets? So let's just quickly get in. And I'm just before I go to the chat, I will just do a little market review. Okay, so here we have the debt of America. So currently it's sitting at 38 trillion US dollars. We've got the fear and greed index today at 22 fear. The market cap of crypto is 2.9 trillion US dollars. That's a little bit down than yesterday. Bitcoin is sitting at 87,000 US dollars. It is up on the hour. It's slightly up on the 24 hours, but it is down on the week. Ethereum, the largest stable coin, is trading at 2,943 US dollars. It is up on the hour, up on the 24 hours and the week. And then we've got Tether, which is the largest stable coin. And then we've got Tether, the largest stable coin. Bitcoin dominance today is at 58.7%. ETH dominance of the market is at 11.9%. And others, which is the rest of the market, 29.4%. We've got public traded companies. Strategy comes in as number one across the world, currently holding 671,000 Bitcoin. And then we've got Japan, we've got Metaplanet, and that is holding 30,000 Bitcoins, which is equivalent to 2.67 billion. And lastly, we've got the Pi Cycle top indicator here. It hasn't been hit, and as we've discussed in previous live streams, it always marks the top of a bull cycle. We've got the rainbow chart as well. On the 30 days, it's really quite low. And then obviously we've got all the indicators, and absolutely none of them have been hit, which is quite bullish for us because it kind of means like we haven't topped, if that makes sense. Let's just have a quick look at who's in the chat. So we've got Mike Volmer. Hello, Mike. How are you? We've got, I can't even read that. I'm so sorry. Prior, how are you? We've got John Legend. I'm just going to make my screen a little bit bigger. We've got Julie. We've got Black Hat Team. We've got, is that C1SCO Wolf? And we've got Mr. Alex Storyteller. There are more people watching. If you are watching, do come in and say hi. Okay, so let's go back to a little bit about history and when it comes to refinancing debt and debt in America as a whole. So after World War II, The US had a huge amount of debt, but the interest rates were kept low, and that made borrowing cheaper. It helped people buy houses and support the economy growth. In to 19 in 1970s in the 1970s, inflation exploded. So to fight inflation, interest rates had to rise, and that made life a lot harder for normal people because mortgages, loans, credit cards got a lot more expensive. Then we had 2008. The financial system broke. People's trust in the financial system. Rusty bot, hello. How are you? People's trust in the system broke. After that crisis, Bitcoin was created in 2009. It was an alternative to the system. Then we had COVID. COVID hit. The borrowing in America grew massively again, and a lot of that was short-term borrowing. And that's why we have this big refinancing war, where a huge amount of US debt has been rolled over into 2026 next year. This is where crypto connects. Crypto basically trades liquidity. So when the rates fall, cash is flowing, crypto generally goes up. When rates rise and liquidity dries up, crypto slows down and it struggles. So when it comes to debt and crypto, as we know, Bitcoin was born in 2009, right after the financial crisis, as a response to the system people didn't trust anymore. Back then, the total debt of America was around 11.9 trillion. Over the years, it's just kept climbing. Now, if we look at 2016, which was the second halving year for Bitcoin, the debt, the American debt was just under 20 trillion US dollars. By 2019, which was the halving year for the next bull run, the debt was about 22 trillion US dollars. Then COVID hit and the borrowing went absolutely crazy. In 2020, the total amount of debt jumped about 26 trillion US dollars, and it's never come down. Now it's about in 2013 it went up again to about 33 trillion. Now obviously, as we've just seen, it's 38 trillion. So since Bitcoin was created, the US debt has just been going up and up and up, and this is the backdrop of what this whole asset class has grown up with, and it's still done really well. And the reason that crypto people care, or we should be caring, is because debt is tied to interest rates, it's tied to liquidity, and it's tied to money printing. When liquidity is flowing, Bitcoin does fly. And obviously, when liquidity is tightening, Bitcoin struggles. So we're going to have, let's see what's going to happen in 2026. Now, Formation is not with us today, bless him, but he did send something, and I'm going to see if I can find it. 1 second. Go to recent. Oh, yeah, I've been able to find it. Now, this is the Treasury rollover. You got 2000, and I can't read it because it's too far away. So you got 2026, and you can see how much trillions there is. I think here it says something along the lines of 11 trillion. There have been different amounts. It depends on how you count it or how you measure it. People are quoting anything from 9 to 11 trillion US dollars. So that's a huge amount of debt. And you can see the rest of the debt. You can see the curve going down. So next year is going to be very difficult. It's going to be quite exciting for us because we're going to see what things go. But unfortunately, we have to live through it. So we obviously want an easy ride. So that sets the stage with the big macro issue behind everything in 2026. Next year, the US debt is going to refinance this huge chunk of debt, roughly around, like we said, around 10 to 11 trillion. Is maturing, meaning that they're going to have to roll this over into new debt. And on top of that, the government is still borrowing new money to fund ongoing deficits. The Treasury is already projecting projecting hundreds of billions in net borrowing just in the early part of 2026. So, where did all of this debt come from? It didn't happen overnight. The US has been running a deficit for years, as we've just seen. It's always been spending more than it brings in, especially after 2008. The debt path kept rising. And then obviously we had the COVID emergency, which saw spending surge, revenues drop, and the government leaned heavily on debt, on the short term borrowing. Um, America has found itself in this big debt pile. There's no getting out of it. It needs to be rolled over. There's no more kicking it down the line, if that makes sense. So the real question is for the markets and especially for crypto. Does this debt cycle pull liquidity out, or do policymakers end up supporting the system in a way that brings liquidity back in? So after hearing all of that, hearing that it's the largest dollar amount of resurfacing in US history, Bill, I'm going to pass it over to you because Formation is not here.
Okay.
What's the current state of crypto right now, and how do you think this massive US debt refinancing could affect crypto going forward?
Okay. Well, let's start at the beginning. Why is Bitcoin slowly but surely down only? Very mysterious, right? Now, there are two angles. One is Bitcoin miners are having a very hard time and they have to sell because of a surge of power prices in Texas. Now, I know this has nothing to do with liquidity in the banking sense, but Bitcoin miners are actually getting forced out. It's called a negative difficulty adjustment. Bitcoin miners have been forced out 3 different occasions. It's almost like what happened at the bottom of the market after FTX, believe it or not, which is why fear greed is so bearish for so long. Okay, so with that said, tariffs, I learned the other day, are a tightening force. They reduce liquidity very simply. Tariffs and retaliatory tariffs just result in less business, less money flowing around. Tariffs are not inflationary, they're deflationary because they hurt demand, right? Unlike what you heard on crypto Twitter earlier in the year. So right now you have forced selling from miners, and you probably have an environment where liquidity is too tight and the Fed is way behind the curve. In other words, I know this may come as a shock, but Donald Trump is actually right, according to this one economist I listened to, that the Fed funds rate is 100 basis points too high. Now, let's go from there to the employment numbers that came out today, December 16th. So today, Uncle Sam released 2 months of employment data, October's or September and October. These job numbers underneath the surface are so ugly. Like, full-time jobs are down by 1 million. I'm sorry. Yeah. Full-time jobs are down 983,000 and part-time jobs are up over 1 million. Said differently, corporations are liquidating their most expensive liabilities, which is full-time workers with healthcare in the US, and replacing them with part-time workers. Now, the Fed has an employment mandate. So how are they going to fix this? Especially since, as usual with Powell, they're behind the curve. Like, they don't see, even though this tariff theory is very old, they're going to wait until there's a liquidity crunch or an employment problem. They've waited too long, way too long. Now, how do you know that? All right, well, let's go back to quantitative tightening. Let's go back to October. So back in October, there was 0% chance of a Fed rate cut in December. 0.
Mm-hmm.
And the Fed was still doing quantitative tightening, meaning they were still draining money out of the banking system. Now, somehow that all changed because not only did they cut rates in December, but they announced that they were doing $45 billion a month in treasury bill purchases, which they said it wasn't QE, it was reserve management. But folks, I got news for you. That's QE. And they're doing $45 billion a month, which is amazing because back in the alleged emergency days, which never ended, they were doing $85 billion a month. And the Fed did $85 billion a month in QE. And the Bank of Japan did $85 billion US dollars in QE, which is amazing that they're 1/3 of our size. Okay. That went on for like 12 years. And then central banks globally printed 14 trillion in March of 2020, which obviously creates inflation because inflation is too many dollars chasing too few goods. So you can't shut the whole world economy down for a year, print 14 trillion and not expect inflation to explode. Now, in this particular case, we have this interesting situation with the government debt. And how does that connect to crypto? Well, let's just think about it. If Powell's got to do $45 billion a month just so banks will lend to each other overnight, which is what that's supposed to solve, how much is he going to have to do when Uncle Sugar has to borrow $9 trillion? In other words, you don't just borrow, you don't go down to the bank and get a loan. You have to sell bonds and someone has to buy the bonds. It's $9 trillion. Okay. So like the conservative estimate that I have is that the Fed is going to have to be doing like $120 to $150 billion a month in QE. And actually our official number is higher than that. But they're going to have to basically be doing possibly double of what they were doing post 2008. Okay, what does this mean for crypto? Well, where are the $9 trillion in bonds going to go? Like Chinese aren't going to buy them. The Japanese may not buy them because they have their own problems, which we can talk about, which everyone is talking about. I think a lot of those government bonds are going to wind up in the hands of stablecoin companies. Treasury Secretary has made no bones about it. The Russians and the Chinese are complaining about it, that we essentially want to proliferate the US dollar worldwide by having stablecoin companies buy treasuries. In other words, lend the government money, take their bonds and use those bonds as collateral to create stablecoins, allowing the Treasury to create money the way the Fed does. So the Fed can print, that's one way. Then the Treasury can give bonds or sell bonds to a stablecoin company that goes, oh, okay, we can create stablecoins now. So let's say we have $9 trillion in government debt issuance. How much of that is going to go to stablecoin companies? How much of that is going to be used to create stablecoins? So follow me here. The Treasury goes out and they issue bonds and they create money through stablecoins, which can be directly attached to the crypto ecosystem. And then the Fed, they have to do $150 billion a month in QE, whether they want to or not, because the banks have got issues. The banks have been completely dependent on Fed loans since Silicon Valley Bank failed in 2023. It's not a secret. It's so broken over there in some aspects. You've got so many bad loans and Americans walking away from cars, credit cards, mortgages. They cannot allow another 2008. They have to print before, because if it ever got out of hand like it did back then, because I was there for that at Goldman, if they ever let it actually blow up like last time, they would never be able to print enough money to get out of it. So they have to preemptively print. So you're going to have the Treasury making stable coins grow like mushrooms in a field. And then you're going to have the Fed printing to save the banks. Now, is that happening today? No. Will it accelerate if you have a bank failure? Yes. You are probably going to have a bank problem. Now, it could be in the United States, could be in Japan, because their government bond market has gone down a lot, and that's hurt a lot of people. So the second you have a real problem, the amount of printing that's going to occur is unbelievable. And as you noted before the show, they are going to have to give people tax refunds. And I really think that's all about not only the midterm elections coming up, so the U.S. Congress or Parliament will be having its election in 2026 in November. So they have to help people. They're talking about giving people money, a special one-time payment into what's called a health insurance savings account to allow Americans to get health care tax-free. Let's put it that way. And then they're talking about tax refunds on top of that. I mean, Besant, the Treasury Secretary, is sitting on $1 trillion in what's called the Treasury General Account. So, I mean, I don't know. You know, there's all these pictures in New York City in the summer about what they will do. They'll open the fire hydrants and let the kids play in the water when it's really hot. The U.S. government has 3 fire hydrants, right? They have stable coin creation, Fed printing, and direct stimulus to the public. All of which are going to happen just as sure as God made little apples.
Mm-hmm. So just very quickly regarding this debt that's going to get refinanced, if we look back at 2 times in American history where they had a huge amount of debt that they had to refinance, if we look back, they did 2 very, very different things. Back in World War I, and obviously at this time we didn't have crypto and all the rest of it. After World War I, the US refined a massive amount of war debt, but it was with very low interest rates. The environment was quite good. It helped average Joe. There was cheaper borrowing. It was easier to buy a house. It was good for growth, blah, de, blah, de, blah. Then they did the opposite in late 1970s. The refinancing happened alongside high inflation, which meant higher interest rates and a squeeze on household budgets like mortgages, loans, cost of living. We've actually lived through that several times with the financial crisis and the cost of living after COVID, etc. We don't want to live through it again. But what scenario are we looking at now? Is it going to be more World War II scenario, where everything's going to be a bit lower, it's going to be a little bit easier for people, or is there more suffering coming ahead?
Okay, so I was around for the 70s. I was not around for World War II, but let's talk about what happened post World War II in America, right? You know, you had a multi-year depression that started in 1929 and really didn't end until the war was over in 1945. So you had massive pent-up demand, and the government could have borrowed all the money in the world because you had massive growth. Things were being built, houses, cars, right? I mean, it was, you know, the economic growth was explosive, and the U.S. government had to continue defense spending, right, to keep up and fight the Cold War.
Mm-hmm.
So you had massive economic growth at that time after 15 years of depression. So I think you can sort of liken that to the AI data center build out, because I think we're going to build everything we can, even if the debt is insane in the private sector. So we're going to build a lot of stuff. We are. And, you know, they need to make the borrowing costs reasonable. because, the build out for AI is like the build out for electricity, right? It was probably very expensive at the time, but I mean, what were you going to do? Go by candlelight? Of course not, right? It has to happen. So I think they need to keep borrowing costs reasonable. And I've even heard talk that they may have to bail out the AI companies. So I think when you can have debt and you can have low interest rates if you have the economic growth that goes with it. Now, the 70s. So that was a hyperinflation period. The chairman of the Federal Reserve had to raise interest rates to 20%.
Oh my God, I didn't know that. That's ridiculous. Ow.
Yeah, the guy's name was Volcker, right? He just
I've heard of his name actually, yeah.
Right. I worked with, bond traders when I was a rookie. I worked with bond traders who remembered Volcker and they just lived in fear. He would get on the tape, he would get on the news and just say money supply is out of control and just hike rates that day. You know what I'm saying? He would just do it. Every time the money supply figures came out, the guy hiked rates. Now, I think what saved the markets from the Ronald Reagan government debt explosion for defense spending was that Wall Street came along. And that's when Wall Street actually became Wall Street and not just a bunch of regular banks. You had firms like Salomon Brothers, and nobody knows who that is now. But they were a firm that came along and said, if you want to buy and sell any amount of government debt, we'll take the other side. So if Uncle Sam wanted to come in, and at this time that was a huge amount, like $13 billion. You want to borrow $13 billion and you want to issue 30-year long bonds, which are extremely volatile, no problem. We'll figure out how to distribute them to our customers. And if our customers don't want them, we'll take them. It was like this ultimate bond market macho thing that exploded. It exploded. Like I worked in bonds and, working in bonds in the 80s and the 90s was, that's where all the action was at. Really. It was incredible. I worked in the futures pit. So the fact that you had futures, you had all these investment banks who were willing to buy the government debt and trade it, it allowed the market to expand. Now, was that inflation horrible? Yeah. But once you started to have economic growth and they cut rates, okay, you not only had no inflation, but you had a stock market that went up for like, I don't know, the S&P bottomed in 1982 and didn't stop going up until October of 1987. It went up for 5 years straight. Okay, so how do we unpack this? Well, I think stable coins are the new Salomon Brothers. They are the new massive buyers of government debt, period. And I think they're going to have to push the Clarity Act through along with the stable coins. They're going to have to make all of crypto a sponge for government debt and then use that government debt to create the dollar, which helps Uncle Sam, and it actually hurts our enemies. Because I don't know who's going to want the Chinese or the Russian currency when you can have dollars on your phone. You have the dollar on your phone with stablecoins. So the Russians and Chinese are upset, and anything that makes the Russians and Chinese upset, we should just do all day, every day. So stablecoins will proliferate. Crypto will be made legal with the Clarity Act. Trump has already talked about pardoning the guys from Samurai Wallet that wrote the privacy code that are facing millions of dollars in legal fees, being sued by the state of New York. So, when things become legal, crypto becomes legal, and when they get the stablecoin thing cranked up and the Fed prints, there's going to be more liquidity than you can shake a stick at, especially if there's a negative event. Now, how long does that liquidity take to move into crypto? Okay, that's a good question. I don't think it's instantaneously up only, but there will come a point next year where you will have a much bigger rally than anyone expects.
Mm-hmm. with this huge refinancing, just before we go on to Powell and the banks, with this huge refinancing happening in 2016, what's the likelihood we are going to see some stimulus given to the population, whether or not, whether I think you just mentioned tax relief or something similar? In other words, where's the money for the bull run going to come from?
Okay, well, the short answer is it's going to come from the Fed and it's going to come from the stock market. So the Fed's going to push liquidity into the system. You know, that obviously can help levitate risk assets. Bitcoin is way overdue to follow stocks higher. I can actually see a situation where stocks go down and crypto goes up. Just the opposite of this year, right? Crypto's supposed to be long crypto, short the banks. This year was short crypto, long the banks. For real. So I would expect that to reverse itself. Now, in terms of the general public, I mean, I read an article that actually went viral on Substack that said the poverty line in the United States. So if a family of 4 is making less than 140,000 US dollars a year, they're poor. They're not ends don't meet, as the saying goes. And I think for 2 people, it's $100,000. So $100,000 in America, you cannot get by. In an environment like that, the demand for alternative forms of money from people who have money is going to be enormous. Now, are they going to put $2,000 in people's pockets? Okay, sure. I mean, they want to put some for health into a special healthcare account. To be honest, if they give most Americans $2,000, that's going to go into meme coins and green plants. Let's face it. However, some people may use that money to get started in crypto. That's possible. Some people may go over to the stock market. I think the larger point is a $2,000 tax refund is the tip of the iceberg of what the administration is going to have to do to win the midterm elections. Because right now they are woefully unpopular because they overpromised and underdelivered. Like the key formula in stocks is to UPOD, like underpromise and overdeliver. So they've underdelivered in many ways, and now they have to catch up, which is convenient because, you know, the Fed has to print, they have to hand out money. And, you know, the only thing we can see is Bitcoin down only. But all you need is something like Silicon Valley Bank to happen to bring the Fed and the Treasury in so huge it's beyond your wildest dreams.
Let's talk about the Fed. Let's talk about Jerome Powell. His term as Fed chair is going to end on the 15th of May 2026. Now, he is going to see the early part of this refinancing, and his successor will see the rest of it. What do you think his focus is actually going to be? Do you think it's going to be leaving a positive legacy, potentially leaving all the difficult decisions and the pain to his successor? And how do you think this will affect crypto and the markets?
All right, well, let's talk about what Powell should do, and let's talk about what he's probably going to do. Powell is going to have to figure out pretty quick that he should do some of the cutting before his predecessor, his successor comes in. So Powell should cut rates now, so there's less political pressure on the successor to cut rates. Because, I mean, let's face it, the optics of that, right? Donald Trump brings you in to run the Federal Reserve, and what's the first thing you do? You have to cut interest rates massively. The optics are horrible. For the sake of the Fed, Powell should cut some consistently before the new guy comes in. That's what he should do. What's he going to do? Probably stand up like a dumb economist and say, well, all my decisions are data dependent, which
Oh,
means that, right. So by the time the problem actually is there, it's too late. Like, for example, this tariff tightness or tariff tightening, which I didn't even know about. Yeah. I mean, they're going to sit around and wait for that to rear its ugly head. It's already rearing its ugly head in the labor market. So, okay, great. He's probably going to do exactly what he did. Now, if you can give him any credit, if I was Powell and I saw this employment number was terrible, right? I mean, the unemployment rate is going up. I don't care where jobs are versus Wall Street estimates. Wall Street estimates haven't been right about jobs in 2 years because the Bureau of Labor Statistics doesn't report accurate numbers. I care about like full-time jobs. Like, are full-time jobs, can you get a job in the United States with benefits? And the answer to that is hell no. You cannot. You can't. So that's a problem for the Fed, and the Fed should use that as an excuse to act. He already has. He's restarted QE. I did a gazillion videos about it, and no one cares. Bitcoin just continues to go down. Probably because miners are selling. Okay, fine. But eventually, that changes. I think it changes dramatically. So, I know that the term hodl is easy when it's going up. But I think CZ put something out today that, you have to hodl when it's ugly. You have to hodl when it's hard. And I think you have to hodl, like, I don't know, if there's a puke at the end of the year because the tax law is selling, or if a bank fails next year, early February, you got to hodl. Because Michael Saylor's right. You'll never forgive yourself if you puke Bitcoin at 80 and it goes to 200 or more.
And this is it. You've really got to have a long-term mindset when it comes to Bitcoin. Bitcoin's not something that you're going to become a millionaire. If you buy some Bitcoin, you're going to become a millionaire in 6 months, or, even in a couple of years. It's a long-term mindset that you really do need to have in Bitcoin. When it comes to ending quantitative tightening, which they did a week or so ago, everybody was cheering, thinking that the bull run was back on. But when you look underneath, and we discussed this on the previous live stream, the Fed was injecting trillions into the banks right before ending quantitative tightening. Do you think that this massive US debt refinancing is going to affect crypto more, or is it going to be the banking crisis moving forward?
I think it's going to be QE to save the banks. I think it's all tied together, right? I think when the Fed does QE, they're going to do QE to save the banks. It can't happen again. It can't, because they can't manage it. You can't have the banking system blow up when Uncle Sugar is trying to sell $9 trillion in bonds. It cannot happen. So they're going to print to save the banks, period. Or the insurance companies, or whoever's got a problem with losses in government bonds, whether that's in the US or Japan. I mean, who knows? It could be the Bank of Japan itself. You don't know. I think they're going to print to save the banks. That's going to conveniently add enough confidence in the system for them to be able to get those bonds out there. Again, the necessity of stablecoins, the necessity of the Clarity Act. I mean, if crypto is not an outlet for those bonds, what is the outlet for those bonds? I mean, not all 9 trillion, but just trying to describe, the intense money creation that can go on. It's huge.
So huge. Banks currently, they're in trouble because they're holding a lot of bonds in losses because they bought them at a lower interest rate. And they're also struggling to meet liquidity demands. Is that correct? Is it these two things?
Yes. I mean, they have have losses from government bonds, from bad interest rate risk management. Those numbers are all over Twitter, but they're actually not the biggest problem. I think you've had banks do a lot of reckless lending. Consumers are just walking away from credit cards, auto loan delinquencies. A lot of this stuff is above 2008 levels. In other words, it's never been this bad in credit cards and loans. They just walked away. Now, the reason you haven't heard about it is because, the banks have been surviving on emergency loans from the Fed. Well, that little fund that the Fed had for emergency loans, they ran out of money, which is why as soon as they stopped quantitative tightening, they went right back to quantitative easing, because it's the only way to keep the banking system liquid. It's the only way to keep confidence in the system. So banks will actually lend money to each other overnight, because that was the problem. That is the problem. Nobody wants to lend to each other because everybody knows all the ugly stuff that's out there. Like I said, banks were incentivized. It was just like 2008. Bankers were incentivized to make risky deals. That's the way it was at a company called Jeffries, which, would be the new Lehman if it wasn't for QE. Okay. So again, and there's also an issue. I go back and forth with this with my macro head friends about whether silver could go parabolic and create an issue with banks that are involved in getting silver from people, say, with futures contracts who want to actually take delivery. Long story, but if somebody wants silver and can't get it, that's a problem. That results in a problem for big banks. So it's like a James Bond movie, right? It's like 1,000 ways to die. There's 1,000 ways that the bond market or the banking system could have stress, and they can't have it. Trump can't have it. Bessent, remember, who was a hedge fund guy under Soros, he can't have it. And I don't know, they got to set the new Fed guy up for success. I think it would be really embarrassing for the United States to be financing $9 trillion in debt, have Powell sit on his hands and do nothing, and had this new guy have to come in and cut aggressively for a good reason. But you don't want to be doing that when the government is refinancing itself. The optics of that are horrible. So hopefully Powell does the right thing. And who knows? I mean, this market could be pricing that in as we speak, because the second that power prices in Texas drop, and the second Bitcoin miners can stop experiencing stress and stop selling Bitcoin, all these things you hear, the OG whale wallets are selling. Yeah, that's the miners, I think. So as soon as that stops, you're going to be looking at a liquidity situation that's going to be breathtaking. It's just that people aren't looking at it right now because the price action is terrible. I mean, don't tell me you weren't upset. I was upset. Don't tell me you didn't go, oh my God, when this thing broke 90 on a weekend. Went from 90 to 85 in 2 days. I'm like, oh my God. That's typically what happens at a low. I don't know if that's the low, but I know that the Fed and Bessent have to come in. They have to.
Let's talk about the previous cycles, because you have been in crypto for quite some time. Is it 2016? I can't remember now. Is it 2016 you got in?
17.
17, yeah. So in previous cycles, did it feel the same? Was sentiment this low? And I think a lot of people are basing, the market's over on sentiment, because we've just checked all the indicators and none of them have been hit, which traditionally are hit at the high, and absolutely none of them have been hit. A lot of people in the past, were they doubting the bull run like now? Was sentiment somewhat the same? And somehow money just ended up in the market?
Okay, well, I have a guy I used to work with, and he made this point, and I think it's accurate, that, the 4-year cycle was something very interesting when Bitcoin was a very small trading product, like when it was basically an altcoin. I think when you look at the last decline that started in 2021 and went through 2022, that was a tightening cycle. Like, Powell had to raise rates from 0 to 5%. That's just unprecedented. It's huge. No risk asset survives that. So if you're going to tell me that the last decline, which of course that triggered FTX, but if you're going to tell me that decline was about the cycle, no, that decline was about rate hikes, which triggered a system-wide liquidation event and purge of excess. Now, 2018, 2019 was a similar situation where the Fed had to get, much tighter than it had been. Now, if that's not enough, I don't know about you, but in 2017, I remember total euphoria before you have a crash. 2021 was even more unbelievable. I mean, Madonna and Tom Brady were paying $600,000 for monkey JPEGs and announcing it on Twitter. Like Madonna was like, I'm now in Web3. I have a $600,000 monkey picture. That's what you had at the top. ETH rock, $2 million. A JPEG of a rock, $2 million, $1 million, something like that. There's none of that. Not even close. Like most altcoins, you're into low cap altcoins. How's it going out there? Most altcoin projects never, they went up, they went down, they went up, they went down. That's it. There's no trend, no euphoria, nothing. You printed 120K on Bitcoin. You had a large distribution and then it came off. You had a good rally in Zcash. Okay. I don't know if you saw this, but Solana, supposedly, according to one YouTube influencer, there's been court papers filed. They're charging the head of Solana and Pump.fun with some sort of like conspiracy to pump the Solana network by having official sanctioned engineered pump and dumps via Pump.fun. Like all we have is men behaving badly. All we have is bags at zero. Where's the euphoria? Like all the cycle's over. What cycle? Okay, yeah, Bitcoin went from 16K to 120K. Okay, yeah, that's a good run. If it's Bitcoin only, then you can listen to the guys with the 4-year cycle. But there's no tightening. I mean, everyone's afraid. Everyone is so afraid of what the Bank of Japan is going to do. Okay, could the Bank of Japan do something or say something that could wreck capital markets? Yes. Are they going to do that at Christmas? No. Are they going to do that at all? No. Because they don't want to be responsible for a world-ending event. People are focused on tightening. They should be focused on this flood of money. So the last 2 cycle tops were about rate hikes, tightening. How can we be talking about that when we know they have to print? Even if you didn't understand one thing I said, if they have to issue $9 trillion in bonds, the Fed has to print. I think that's a reasonable thing for people to understand. And if they have to print, well, then you can have massively higher Bitcoin. And if there's a reason for them to print, there's going to have to be a reason. And probably you're going to have problems with a bank. And the second that happens, like I said, you don't have a tightening cycle. You have a colossal flood of money coming. So I see this as being exactly the opposite. It doesn't feel like a top. It feels like a bottom.
It does, isn't it? It does. Okay, just very quickly, look how poorly. I mean, Zcash is on there. I think it's the second one down after Pippin. But this is the performance of the top 100 coins over the last 90 days. Absolutely awful.
Yeah, it's just destroyed. The whole market is destroyed. Like most altcoins, they went down and stayed down. I'm not talking about, I'm talking about like technology-based altcoins. Like the AI agents had a pretty good rally. Like my partner, Toby, found this. Like, there were there's like a bunch of AI agent coins that went up like 40% last week. But the whole rest of the space is dead. I mean, like I said, that story about Solana, now you know why Solana can't go above 180. And now you know why it just sits there at 120 like it's dead. I mean, who would have thought?
I was hoping Solana would have cleaned up its act So it's quite disappointing to hear about this. Let's see what happens. But that's absolutely brilliant. Next week, we should have Manu for full information with us. So yeah, thank you so much, Bill. That was absolutely amazing. That was so much alpha dropped. Guys, if you haven't hit the like button, please do. And please follow Bill Noble's channel as well. That's brilliant. We'll see you all next week on Tuesday. And this Thursday, I've got a crypto story dropping. So thank you all so much, and we'll